Imagine standing in a mortgage lender's office, ready to buy your first home. The officer looks at your score. Sir, it's a 621. They tell you that you'll qualify, but the interest rate is going to be brutal. Over 30 years, that bare score is going to cost you an extra $180,000 in interest. That was Patricia's reality. But just 93 days later, she walked back into that same office with a 761. The lender actually asked if she'd sent the wrong social security number. She hadn't. She just discovered that building credit doesn't have to be a decades-long crawl. Today, I'm going to show you the loopholes hiding in plain sight that can save you 6 figures in interest. The standard advice is always the same. Pay your bills, keep balances low, and wait. Banks love that advice because it keeps you in high interest purgatory longer. A customer with a 680 score is more profitable to a bank than one with a 780 because they pay higher rates. Credit scores aren't a moral judgment. They are a mathematical prediction. Once you know the rules of the math, you can optimize them. The fastest way Patricia jumped 140 points was through authorized user trade lines. Think of this as importing someone else's decades of perfect behavior onto your report. If you have a family member with a credit card they've owned for 20 years, perfect payment history, low balance, and they add you as an authorized user, that entire history appears on your report immediately. Your average account age could jump from 2 years to 12 years overnight. You don't even need a physical card. Just being on the account transfers that credit worthiness to you. It's explicitly legal and built into the system. This next one is a timing trick that takes effect in a single month. Most people think as long as they pay their bill by the due date, they are fine, but that's a mistake. Banks report your balance to the bureaus on your statement closing date, which is usually weeks before your due date. If you charge $2,000 on a $3,000 limit and wait until the due date to pay it, the bank reports you are using 67% of your credit. Even if you pay it in full every month, this utilization tax crushes your score. Find your statement closing date and pay your balance down to 13% before that day. Your score could jump 20 to 40 points in one billing cycle just by changing when you click pay. Credit utilization is a ratio, your balance divided by your limit. Most people only focus on the balance, but you can also change the limit. Every 6 to 12 months, call your card issuers and request a limit increase. Many banks, like American Express, often do this with a soft pull that doesn't hurt your score. If you double your limit from $5,000 to $10,000, your utilization ratio instantly gets cut in half, even if your spending stays the same. Before you start, pull your free credit reports and check for errors. Studies show a huge percentage of reports have mistakes that drag you down. And a word of caution, if you use the authorized user strategy, make sure that person's account is spotless. If they miss a payment, it hits your score too. Choose a partner you trust completely. Why does this matter? Because wealth isn't about having stuff, it's about optionality. When you have a 780 score, you have the option to walk away from a bad deal, the option to buy a home without a credit tax, and the freedom to keep more of your own money. Patricia's 140-point jump didn't just change a number, it saved her $215, zero. That's her retirement, that's her kids' education, that's her freedom. Don't wait for someday. Check your statement closing date today. Ask a trusted family member about a trade line tomorrow. These rules are knowable, and once you know them, your financial future is in your hands.